Welcome back to Money Channel. I'm your host, Erin, and today I'm going to talk about two things. One, be careful of the types of accounts and companies you are putting your money in. And two, I'm going to use a friend I have as an example of this, okay? So, I have a friend that would like to get into futures trading, okay? Even though I keep telling him it's very risky. He wants to use a prop firm. Okay. Now, the issue is that trying to find companies that are either reputable or they are FDIC protected or they're going to protect your assets. So there have been cases where I literally have to ask him, like, look, let me see uh, the company, let me check it out first before you even consider going with them. So I will read the fine print, I will find out where they are based in. So, for example, companies that like to take your money tend to be based in territories where the US cannot reach them. Okay. So, for example, like Cayman Islands. Okay. Um, they also like to be anonymous. So, if you have a company that has anonymous people working under fictitious names in Bahamas, it's very difficult to find them. So, there has been cases where I will look at the companies he wants to put his investments in or go for. And there was one I literally said, no, this company is not based in the US. It's not following US law. If you even put, let's say, $100, if you even make money, how are you going to get it out? Like all these things, because of the fact that it's not FDIC protected. It's not even like there's no insurance or protection on it. So, for all you know, it's registered in another country, and like that other country could have liberal laws. It's not very strict or stringent as the US, okay? And it's very hard to find these people. So there was one where he was excited and he said, okay, I'm going to send you the link. Let's go to this online conference and check them out. Okay, no problem. I logged in. We were both on the online conference. As their representatives were speaking, I kept texting him whether the information is true or not. So I said to my friend, this information is true. The other information is false. So it was a constant like, this is true, however, this is false. This is true, however, this is false. So the company he was looking at, like what they were trying to do is that you pretty much buy cryptocurrency from them and they hold it for you and you make a percent APR. I said to him, I don't trust that, being that there's already companies like crypto platforms such as um, Coinbase that already do that. And you don't need to pay a percent fee or any management fee or anything like that. I said, this is BS, um, because I've done it. I do have a Coinbase account, and in the past, I actually had Solana coin gaining a percent APR. And I told him about this. I said, no, I've never paid a percent fee for having a crypto coin earning APR on it, you know? So I said, this is a fraudulent company. And I said, let me confirm with my hedge fund manager X. And he said, nope, get out of there. I said, that's what I thought. I just wanted to confirm with you. And I told him, I said, we both think that this is a fraudulent company. Okay. So you have to be careful of receiving like group invites. You have to be careful of receiving invitations by, I don't know, whether it's Telegram, Snapchat, Instagram, whatever it is. I've seen him receive like fake, um, I don't know, Schwab or Wells Fargo, fraudulent stuff, and I'm like, Schwab doesn't have this. Like, what are you talking about? It's not possible to do this on Schwab. So, like, it just, it is what it is, you know? Now, the other part of, like, another story that I'm gonna attach with this is that I know someone that knows someone. Unfortunately, this is a real true story and it's very tragic, okay? This person is an older person nearing retirement age and put in their retirement in a company because this company promised, like, oh, you can make an XYZ amount of money based off of holding your retirement account or all your money in this account. And he believed it, and he literally put his whole entire retirement account, which was about $1 million, into that account. And he couldn't take it out, and they said that if he wants to get his $1 million, he has to send them money, like 100,000 or something crazy. So you also have to be aware of that. Like, and I asked, the person that knows the guy, I said, look, where was the company based? Was the company based in the US? Was the company based in Cayman Islands? Was the company based in Bahamas? Because they can escape, US law in this way. So, it's tragic that that happened. And it's very hard to find these people when they take your money and then they just close out the business and they go scot free and they're anonymous. So you have to be careful and do your duty and just be vigilant, sorry, about which companies you are choosing to put your money in. Now, going back to futures, I do not trade futures nor options. Futures is very tricky, and I'm not currently willing to take on that risk. Okay, so for example, like last weekend, I went to play pool with that same friend that received the crazy messages about, oh, you could gain APR by buying this crypto, but you have to pay a percent fee. So I went to play pool with him last weekend, and I'm not joking. While we were playing pool, um, I received a message saying that Donald Trump um, put 50% tariffs on Europe. Okay, and I said, okay, crap. We gotta think about, okay. This was Saturday, so come Monday, I expected the VIX to be low. I mean, sorry, the VIX to be high. I expected the markets to be negative. And I asked him, what would you do in that situation? Because he wants to be a futures trader. So think as if you're already trading futures. What would you do on that situation? He said, oh, I would trade NASDAQ and Dow. And I said, no, 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 no. I said, think about it. Closely analyze the situation, okay? If there's a 50% tariff on Europe, futures, what consists of futures? Okay, commodities. So what's inside of that? Okay, you've got cattle, rice, sugar, coffee, soybean. And he's like, crap, you're right. I said, yeah, where are they getting the soybean? Where are they getting the rice? Crap, yeah, some of that's coming from Europe. So chances are the futures are also going to be negative. And he's like, I hadn't thought about that. Yes, you can't just expect to be making money all the time, because there's going to be situations where you're dealing with news bigger than, for example, the US, news bigger than, the region. So, news bigger than just one industry. So, for example, in this case, we've got tariffs. Tariffs affects not just the US, not just Europe, the rest of the world. So that's going to cause prices to fluctuate and indices to also be volatile as well. And then you also have to think about other things that's bigger than tariffs, okay? So, for example, if the Fed starts speaking, Jerome Powell starts speaking, that man is known to move mountains high or things so low that they sink to the sea, okay? Based off of any little word he says, the market moves astronomically. So that's another factor, just the Fed speaking. Another factor is things outside the US, global economies, economics of scale. If there's trade tensions, for example, with China, the war with Ukraine and Russia, okay? If there's, for example, oil problems within multiple countries. So, because of Russia and Ukraine conflict, and then the Middle East may want to decrease output instead of increase it, that's going to affect the price of oil as well. So, all of these things are integrated within each other. So, you can't just say, oh, I'm just going to, fluctuate between Dow and NASDAQ if you're trading futures. No, you have to look at more of a macroeconomic pattern now. So when you trade in general, there's usually like a microeconomic situation, meaning it's within the country, within a specific industry, and then there's a macro, meaning it's global, okay, or within other regions or other continents. So, he hasn't thought about that. And again, that's what you have to think about when you're trading um, stocks, futures. And then regarding options, I don't trade options. But however, most people don't know this information that when you're trading options, the contract, they're like, oh, it's cheap. I can afford to buy it. No, the contract is times 100 shares. So if you think, oh, the contract is only $20, no, that's $20 times 100. That's the true worth of the contract. Are you willing to take on that risk or that gain? It's whether you are okay with the risk and can you afford to lose it without going crazy, okay? There is a book called The Psychology of Money, and it teaches you how to manage your emotions when you trade. So I recommend you read that book or find a summary of it because your mind will go crazy when you trade. Okay. Um, when I tell my friend like, oh, sometimes it's like I've been in a trade, for example, that I lost. It's not realized, but an unrealized loss of 2,000. His eyeballs are like, what? And it's like, okay, but you want to go into futures and you're not willing to possibly lose 2,000. Okay, that doesn't make any sense to me. So you have to be willing to lose and mitigate your risk, or at least manage your risk. It's called risk management. Okay, so this is what I got for you today, guys, and I hope you enjoyed my content. Please like and subscribe. Catch you later.